Assalamu alaikum dear students, hope you will be fine. Today I am delivering the lecture to you people after I think 12 days or 15 days gap because I was not feeling good, that's why. So sorry for that. Let's start our topic. Our new chapter is money markets and its instruments. So what does it mean by money markets? Most of the students, they are getting confused in money markets with the name. They are saying that, they are thinking that money market means that market where money is trading. Look at money market is something else. Money market and capital market we will study it in our upcoming classes. So money markets, that is refers to a market where short-term security that are dealing. Money market is a market where short-term debt securities that are trading. Such market is called what's money market. This is the simplest definition of the money market. A financial market where the short-term securities that are trading. So such short-term market is called money market. Or we can say that money markets refers to trading in very short-term debts investments at the wholesale level. This market involves large volume of the trades between the institutions and traders. So at a retail levels, it includes money markets mutual funds that is bought by an individual investors, and money market accounts sometimes opened by the bank customer as well as. What is money markets? So money market, dear students, is that financial markets where the short-term securities that are trading. And what is short-term securities? So those securities whose maturity is not more than 12 months, 1 year, less than 1 year. The securities which have maturity less than 1 year. So those security, all those securities which are trading in such a market, so that market is called money market. Hope you will understand. This markets includes such assets or securities or certificates of deposits, interbank loans, money market funds, treasury bills, T-bills, repurchase agreements, commercial papers, and all short-term security loan. So when all these instruments that are trading in such a market, so that market is called what? That is called money markets. A segment of the financial market in which the financial instruments means financial assets. Financial assets means the T-bills, commercial papers, money market funds, interbank loans, short-term securities, all these are called financial instruments. They have high liquidity. High liquidity means that as their maturity is too much short, so their liquidity is too much high. instead of cash, they are easily convertible into cash. When any time the investor want to sold out it, so they can easily sold out it and convert it into money. So the liquidity of such instrument is too much high. So that's why all those instruments with high liquidity which are trading in the market, so that market is called money market. As their liquidity is high and they have very short maturity, so when these instruments that are trading in such a market, that market is called money markets. The money market is used by participants as a mean for borrowing and lending in short terms from several days to just up to 1 year. Means that money market is that market where the borrower and lenders of the security took place, and maybe this borrowing and lending be of few days up to 1 year. Clear? Yeah, simply we can say that money market is that mechanism where the buying and selling of those financial instruments are done whose lifetime is up to 1 year. So such market is called what? That is called money market. Look at, dear students, the money market is a component of the economy which provides short-term funds or securities. So the money market deals in short-term loans generally for the period of less than or equals to 1 year or 365 standard days. As you know that money became a commodity, so the money market becomes a component of the financial market, as we discussed in our money banking subjects in our previous lectures, that money becomes the commodity, so the money markets becomes a component of the financial markets for all the assets involved in short terms borrowing and lending, buying and selling with original maturity of 1 year or less than 1 year. So trading in money market is done over the counter and in shape of the wholesales. Like, look at, if you need the commercial papers of any company, T-bills of the government, so through by the the counter market you can buying and selling. So there are several money market instruments in most, like in Western countries. Unfortunately, they are not existing here in Afghanistan. So like they are including the money market instrument, including like treasury bills, T-bills, commercial papers, banker acceptance, certificates of deposits, yeah, these are called deposits, something, bill of exchange, repurchase agreements, federal funds, and short-lived mortgage, asset-backed securities. So these instruments, they have the maturity up to less than 1 year. So when these securities that are trading in the market, in a financial market, so that market is called what's money markets. Money markets that provides the liquidity for the global financial system, like for they are including for the capital markets. They are part of the broader system of the financial markets. So hope you will now understand the concepts of the money markets. So now we will move towards the characteristic of the money market. Look at characteristic of money market. So it's not a single market but a collection of markets for several instruments. Means that several instruments that are trading, not in a single market. Clear? This is a collection of market and several instruments like short-term certificates of deposits, banker acceptance, treasury bills, commercial papers, municipal notes, federal funds, repurchase agreements, which are, we say that these are the short-term instruments which are trading in this markets, and this market is not a single market, it is a collection of the market. So this is our first one characteristic. Second one characteristic of the money market, that it is wholesale market of short-term debt instruments. Look at wholesale market means that here single security will not be trading, like you need that you want to buy only one commercial paper. No, here is that is a wholesale market. At the trading should take place on the lump sum quantity, at a huge quantity. Buying and selling will took place. Further informations of about the characteristic of the money markets I am giving you. I take these from the Mishkan book, so you can study that book with the notes as well as they will help you to increase your knowledge. So money markets instruments, they have a few things in common. For starters, we already mentioned that they have short maturity, number one, defined as 1 year or less than 1 year. So a 6-month certificate of deposits would qualify as a money market instruments, but a 2-year certificate of deposits, they are not the instrument of the money market. Why? Because the 2-year certificates of the deposits maturity is why? That is higher than 1 year. So that 2-year certificate of the deposits will be traded in the capital market, not in the money market. But the 6-month certificates of the deposits, or 3 months or 9 months or up to 12 months, they will come in the category of the money market. This security will be traded in the money markets. Why? Because their maturity is less than 1 year or up to 1 year. So money market instruments maturity can last from 1 day up to 1 year, mostly with the 3 months or less being most common. 3 months or less than 3 months security are too much common, and they have high volume. Money market, they have the characteristic of liquidity. Dear students, as I already discussed the liquidity, that money market instruments are liquid investment, which means that they can readily we can say that they are easily be bought and sold for stabilized price on the market price. These are the dear students are active secondary markets for most money market instruments, so they can be easily sold out before the maturity. Look at, if I have a promissory note or I have a commercial papers of maturity 3 months. I purchase it and after 1 month I want to sold out it. Still their maturity, there are 2 months are left. So I can easily without waste of time can sold out this one in the secondary markets. So means that all these instruments have the high liquidity. So hope you well got this point. Second one is safety. Because of their liquidity and the nature of the lender, money market instruments are safer, too much safer than many types of other security. For example, treasury bills are backed up by the credit of that governments which issue the T-bill. For example, if Afghanistan government, they are issuing T-bills. So that T-bills is backed up, and it means that they have 100%, there is 0% risk in this. Why? When government have shortage of the money for the repayments of the T-bills amount, so they will issue the currency and will give back the treasury bills amount to investors. So that's why that is backed up. But look at, dear students, this is I feel important to mention here that low risk and risk free security. There are two terminology you have here before, and if you not here before, so I want to clarify this one. One is called risk free security and one is low risk. So look at risk free securities like certificates of deposits, that is risk free securities. Yeah, simply treasury bill security, that is risk free. There is no risk involved here. How much you make investment, your investment will be 100% returns to you. But low risk securities, there is some risk is involved. For example, like if I compare the T-bills and commercial papers, so T-bills are the free risk security that is issued by governments, so the risk of this security is 0. Clear? But commercial papers, that is issued by corporations, a private limited company, yeah, simply that is issued by a private sectors. So here risk is involved, and that risk is related with the company. For instance, if only the commercial papers will be safe only when the company, that company which issue it, if they are financially strong and there is they have a good repo in the markets, so that will be safe. But if unfortunately that company face some financial hazards or some problems, so the commercial paper which is issued by that company, so they will also becomes a risk. The risk of that will be increased. Clear? So to sum up, money market instruments are seen as safe place to put money because of their high liquidity, short maturity, and safety relative to other types of the investments. Clear now? So this was the characteristic of the money markets. Now we are moving towards the features of the money market. So features of the money market, dear students, this market purely for the short terms, as I discussed early, or for the short terms funds, or for the short terms financial assets, that is also called near money. It deals with the financial assets having a maturity periods up to 365 days or 1 year or less than that. It deals with only those assets which can be converted into cash readily without loss and with minimum transaction cost. So features of the money markets is what that these markets, the money market, that is used by the participants who are the participants of the money market, borrower and lender, and they will make borrowing and lending for the short period of time, and that short period of time may be for days, maybe for weeks, maybe for months, but not more than 12 months. This is first one features. Second one, maturity up to or less than a year. In here, those instruments are tradings whose maturity is not more than 1 year. Maybe your maturity is 30 days, 1 month, 2 months, 3 months, 6 months, 9 months, but not more than 12 months. But keep in mind, mostly those securities, the large volume of such securities who have maturity up to 1 month, they are trading. Next one feature is safe investment with lowest risk and high returns. Here, those securities are trading whose risk is minimum, and your returns is too much high. Total returns is too much high. Another one feature is high liquid. This market is high liquid, means that any time if an investor want to sold out their security, so they can easily sold out their security without using their time. So liquidity of such markets is too much high. Another one features of the money market is high volume of lending, borrowing. Millions of dollars trading, billions of the dollar tradings that took place. So the volume of the lending and borrowing is too much high. Like a money markets, by providing profitable investment opportunities for the short terms surplus funds people's helps to enhance the profits of the financial institution as well as of the personal. These are also comes in the functions of the, we can say that the features of the money markets. Another features of the money markets that it deals with only those assets, financial assets, which can be converted into cash rapidly without loss and with the minimum transaction cost. This is another one features of the money markets, dear students, generally the transaction take place through phone calls, or we can say that oral communications in the money markets. Relevant documents and written communication can be exchanged subsequently in these markets. So there is no formal place like stock exchange as in the case of the capital markets. Means that they have the features of the OTC market or the counter markets. All the transaction took place. Transactions have to be conducted without the help of the brokers here in the money markets. Look at in the capital market or in the stock exchange markets, when the transactions taken place, so through with the help of a brokers over there, the transactions are required. But here in the money markets, without the help of the broker, transactions that have been recorded. Clear? The components of the money markets, dear students, mostly are the central bank, commercial banks, non-banking financial companies, discount houses and acceptance houses. Unfortunately, these institutions that are not in the Afghanistan, and mostly commercial banks that are exist in Afghanistan. So commercial banks generally play a dominant role in this markets. So hope you will understand what is mean by money markets and what are the characteristic of the money markets, and then what are the features of the money markets. So the next topic is money market segments. So inshallah in the upcoming class I will discuss in detail. For now, I will, Allah Hafiz, have a good time and take care of yourself.